and Mr. VT Ravindra MD. At the outset, I would like to thank VST Dealers Management for taking time out to join us this afternoon. I would request management to commence the session with their opening remarks on the current tractor demand environment and outlook for FY27. Over to you, sir.
Good afternoon, everyone, and thank you for being here for this call. Very happy to share with you the highlights of the performance of FY26. It's already updated on our website. The details are there, the numbers are there. So, looking towards FY27, it's a very uncertain scenario. All of us know that we have on one side the inflation driven by a war, and there is also this impending El Nino affected monsoon that is expected to be short of the normal long period average of rainfall. Although that will be something we will have to see as it happens. So it's uncertain time, so there is no guidance that I have given on my call. What I have said is we will look at it quarter by quarter, month by month. As of April, we have done well compared to the previous April. May also seems to be okay. June is when the rainfall will start. In fact, some of the regions have started receiving the rainfall. It looks to be early this time. That is good. And if it continues with the spread and timing across India, then it's fine, even if it is a little lower than LPA. However, that is something that we will have to wait and watch. So it is going to be monsoon dependent. We have our internal plans to grow the small farm machines, which is typically the power tiller and the power weeder business. We are also having multiple launches of products in the compact tractor space. We have entered the larger horsepower tractors through the joint venture with Zetor. VST Zetor Private Limited takes care of that business. We have piloted in the last 1.5 years. Now it's time for scale up. We expect to scale that business up in FY27. Globally, of course, the business is affected because of the war, the inflation. Europe is not doing so well. However, we have maintained our business. We have kind of been flat there with established operations, which we are planning to open in Netherlands very soon. We believe that we can support the distributors even better by increasing, or rather decreasing delivery times to them and increasing rotations for them. So that is one step that we are immediately taking to drive more business in Europe. The plans for launch in US is going as per the timetable set for that. We are expected to send those tractors to the US by the end of this year, and the launch in the market will happen in 2027, end of 2027 calendar year. The capability building, the competency building exercise is continuously on. The global tech center that we have announced is getting ready. That will also be inaugurated by 2027. More or less all the approvals have been obtained. The construction is happening soon. In 2027, we will be launching the global tech center. The ability to launch products, create more global products will have a step jump with the global tech center coming up, because for several development activities, we are dependent on external agencies at this point in time. That will get eliminated as soon as we have our own facilities. This is also a center which will be focused on small farm machines. So we are one of those companies who have invested heavily into R&D on small farm machines. Like I have said earlier, we would be launching some of the platforms in small farm equipment or small farm machinery this year. There is a product between tractors and tillers that we will be launching this year very soon. We have the announcement already done for the launch of electric weeders and tillers, and the scale up of that will happen starting Q2 onwards. We have got good responses from all the exhibitions that we have participated in. In fact, we have shared some of the photographs of the exhibition and the huge crowd response that we got to on these machines in our investor presentation, which is posted on the website. With these opening remarks, I look forward to answering your queries, and thank you.
Thank you so much, sir, for the opening remarks. Now we can open the for the Q&A session. I request to all the participants to ask a question. Please use the raise hand feature. Alternatively, you can unmute yourself and directly ask a question by introducing yourself and the fund name. As the question queue assembles, Yash, do you want to take a few of your questions?
Yes,
Sure.
there is a question. Yes, I want to ask that we know that there would be El Nino impact, and the weather forecast has also been like slightly lower than the average. But how resilient do you think tractor demand could be based on the current reservoir levels, and like lower interest rate and GST benefit could sustain the demand momentum going forward?
Yeah, there are two parts to this question. One, there is a effect of the rainfall. See, there is a large part of the country which is still rain-fed, which is typically single crop areas, and those areas will definitely get affected if the rainfall is not received on time and sufficiently. The areas which are irrigated might have some effect depending on the quantum of rainfall they receive. Normally, what we have seen historically is those areas might do a pattern of cropping which is different, like a three crop area might do a two crop of rice and something else, use the moisture in the soil for something else. So, but the effect on the rain-fed areas will be quite drastic. Coming to the point of impact of GST reduction, and today we are in a environment of inflation. So today, practically all the companies have increased prices of their products. We have also done so. The inflation pressure continues. We have seen multiple hikes. We are expecting rather multiple fuel hikes. If this inflationary pressure continues, then it is very unlikely that the volume demand we saw with the effect of GST reduction will sustain. It will not sustain.
And sir, how sensitive could be tractor demand to the fuel price hikes, and how much hikes we have taken year to date to compensate for the RM basket inflation, and how much impact we still have to take in our quarter one results expected?
Yeah, we have done a multi-pronged uh, approach to ward off this inflationary pressure. One is, of course, the price increase. Second is increasing efficiency. Third is cost reductions. So overall, we have been able to pass on roughly about 1.5% increase. We have also got some price increases wherein, for example, the power tiller business is largely dependent on the price set by the government for subsidy. There we have got price increases upwards of 2-3%. Then there is the efficiency improvement with TOC implementation in our supply chain that we have seen, and we have been able to optimally maintain our inventory through this entire process. Secondly, also the cost reduction that we have received is in the tune of 2-3%. So overall, we are able to manage our bottom lines healthily. But like I said, if this inflationary pressure continues, then we will have to pass on more to the consumer, and that will definitely affect demand and volumes.
Okay, sir. And how much has been the fertilizer availability impacted the current sowing? And do you think this could also have an impact on overall production for Kharif this year?
There is, region to region, there is different effect of fertilizer availability. But by and large, I think uh, more than fertilizer availability, the issue is going to be on the
आता
monsoon.
ये भी ये यहाँ पे ट्रैक्टर चल रहा है मस्त है रिजल्ट उसका गाइडेंस
I request all the
है
participants to please stay on mute.
आउटलुक फॉर ट्रैक्टर जनरल कॉल है
Okay, I think yeah, that is it on fertilizer, and I think the bigger issue is the monsoon right now.
Okay. And recent ban by Indonesia on the palm oil exports. So could it be beneficial for our Indian farmers, where in few pockets we could see higher production in the mustards and other seeds?
Yeah, see, end of the day, if the revenue of the farmer goes up, it is definitely helpful. So replacing one with the other, typically helps, especially if it is produced in India and the consumer or the farmer gets the income from that particular produce. So it definitely helps. All these factors. But India is, all of us know that India is a very large country, and single factor alone doesn't drive demand in this country. So certain areas would definitely benefit from mustard prices. Certain areas would definitely uh, benefit from groundnut and other oil seeds prices. So there is a mixed bag here. So what exactly is the impact of mustard is not something that I have estimated as of now.
Okay, I will wait for if anyone has any question, please raise your hand.
Yeah,
Or
I can go ahead.
yeah,
Yes,
sure.
please go ahead. You can just introduce yourself and go ahead.
Yeah, this is Devish Kayal from Boring AMC. So just to clarify, so this product launch in US would be end of CY 27 and not FY 27.
Correct. End of CY 27.
Okay, and if you can just elaborate on this inorganic opportunity. So where are we? What kind of target we are looking at, and what kind of size, and within India or outside India? If you can just elaborate on this.
So we are looking at opportunities which are adjacencies or within our scope of business currently. We're not diversifying into anything new or completely different business. That is not something we are focused on. What we are focused on is adjacencies or within the same domain. We are looking at both global as well as in India. We are evaluating multiple opportunities, and hopefully in the next 6 months or so, we should be able to close down on at least one of them.
Okay, and this would be JV or a full 100% acquisition?
It depends. It's too early to say anything on that. It will be an acquisition. It is not likely to be a JV.
Okay, and what would be our cash on balance sheet as of now, excluding the land? Like I'm not considering because that is land, but cash and cash equivalents.
Yeah, investments are at about close to 600 crores.
Okay,
Yeah. So
okay,
everything is uploaded on the website, and it's readily available, and our presentation gives all the details as well.
understood. Okay, yeah, that's it from my side.
Thank you so much. A request to all the participants to ask a question, kindly use the raise hand feature. Alternatively, you can directly unmute yourself and ask a question by sure, introducing yourself. As the question queue assembles, Yash, do you want to go ahead with your
Yeah,
question?
my question is basically on the power weeder and tiller segment, which have shown exceptionally strong growth in FY26. Do you believe mechanization penetration among small and marginal farmers is at inflection point right now? And what expected midterm growth you expect in this sector?
You're talking about the
Power weeders and tillers.
power weeders and tillers is a great potential. Like I've always said, 70 to 80% of Indian farmers are small and marginal, and there is a tremendous opportunity for growth here. I would say I have elaborated this earlier as well. There are multiple challenges here in terms of awareness, in terms of availability, accessibility, affordability, and also building the confidence in the farmers. I call it ability. So the five challenges is something that we are continuously working on to overcome. The potential is tremendous. The opportunity is tremendous. we can see that the power feeder industry is growing by leaps and bounds. Largely, it is import driven, brought in from China and other countries. We are the ones who have started manufacturing power feeders in India. In the last 3 years, we have grown from roughly about 2,000 numbers to last year 11,000, close to 11,500 or 400 numbers. So that has been good growth, and we expect that growth to continue. We expect to continue the same momentum and grow further in this segment.
Sir. And my next question is basically on the broader launch of electric feeders and other electric products in the portfolio. What kind of customer economics or payback period are you targeting to drive the adoption? And how much annual capital allocation do you expect towards electrification, small farming solution, and drivetrain technologies in next few years?
Yeah, so the capital allocation towards EV, particularly electric, is what you're asking? Just want to clarify.
Yes.
Yeah, so what we have done is focus on power tillers and power weeders to begin with. We believe that there is huge potential in that area because the usage factors is as such, because you are able to get 4 to 5 hours of working from a single battery charge, which is almost similar to the usage of an ICE engine when the customer uses a weeder or a tiller. So we are able to replicate almost the same usage. And with this kind of usage, typically, if the person uses in the power tiller or power weeder, let us say 120 days in a year, we have seen typically in power tillers and power weeders, the payback is within about 2 years. We believe that the same payback, or in fact, since the fuel cost is completely avoided, the payback will be even faster in the case of electric weeder and tiller.
Thank you so much for the answer. Uh, this is just an announcement of final. I request to all the participants to ask a question. Please use the raise hand feature. Alternatively, you can unmute yourself and directly ask a question by introducing yourself. As the question queue assembles, Yash, do you want to go ahead, please?
Last year, Maharashtra and few other states had a very strong tractor growth. So, which are the geographies this year, like states which are you expecting because of low base could outperform overall tractor industry?
Yeah, so in Maharashtra last year, we saw a large amount of subsidy being given by the government. Such schemes, if announced by any state government, you will see a spurt of growth. But however, if you look at in a longer period of time, you will see the demand is actually over the longer period almost the same. So there is, I would say, a subsidy typically what it does is it pulls up some of the pent up demand. And that is what typically happened in Maharashtra. And, there is no way of predicting which state would do that this year. But I would say that, the tractorization typically is at around, last year, of course, was a growth driven like the schemes which you just said in Maharashtra, etc. But I believe it will be around the same 10 lakhs to 9, anywhere between 10 lakhs to 11 lakhs kind of figure. So it is likely to be flat this year, unless some schemes is announced by the state governments. Of course, this factor of lower rainfall, factor of inflation is yet to play out, right? So it is too early for us to say whether it will be flat, whether it will be single digit growth, or whether it will be slightly negative. It's too early to say that. So I won't venture into predicting any of that. However, I think it will be in that region.
Okay. And sir, replacement demand has been one of the key factors in overall strong volume growth over the years. So, how much share of overall volume growth is supported by replacement demand? And do you expect it to support higher this year to overall demand being
Yeah,
resilient?
so over the years, what we have seen is repeat buyers are continuously increasing every year, right? But however, if you see from VST's angle, and especially the segment we serve, which is the small and marginal farmer segment, power tillers and power weeders, we see a large amount of first-time buyers, that people coming into mechanization. So that is where I believe the opportunity is, and that is what we are trying to serve through VST.
Yash,
And any tentative idea how much is the share of replacement in overall volume growth in FY26?
Very difficult to predict that is because you will see when the inflation and monsoon pressure or the water availability pressure rises. Typically, what happens is the first time buyer percentage goes down. So there is, again, that is something I wouldn't want to venture into to predict. But typically, what we have seen is repeat buyers are increasing every year in the tractor segment. What we are seeing is the first time buyers are increasing in the lower segment. That is the power tillers, power weeders, etc.
we have a question from Triza from Nirmal Bang. Triza, can you please unmute your line and ask your question?
Yeah. So in this power weeders and tillers category, what would be your overall market share and what percent would be going to the Chinese products? And even in tractors, any particular regions where you're especially strong in and have a high market share?
In the power tiller segment, we have a 75% market share, and no Chinese imports are allowed in the power tiller segment. Uh, in the power weeder segment, we have a market share of only about 6 to 7%. And that too, we have just started 2 years back. We believe that we can grow a lot in that area. Large amount of Chinese imports happen in that segment. So it is a totally unorganized segment. So to figure out the market share is also difficult. We depend on imports data to estimate where we are. As to the third aspect, which is on the tractor strong areas, we are strong in Maharashtra and Gujarat. There we have upwards, and again, we are strong in the compact tractor segment, that is four-wheel drive compact tractor segment. We have around 10% plus market share in these states on that segment.
Your overall country market share would be how much?
Less than 1%. Overall tractor industry less than 1%. But we are only in the less than 30 HP four-wheel drive compact tractor space. We have just entered the large tractors last year.
Sure. And anything on the financing trends? Do you all have any specific partnerships, for financing of products with
Yes,
any
we
of the?
have several partnerships on tractors. Of course, practically everybody finances our tractors. In the power tiller space, the retail finance wasn't very relevant until last year. We started pushing for retail finance through the power weeder and the power tiller segment. In last 2 years, I can say 10% share of our business in power tillers, power weeders is coming through retail finance. I expect that to continue to grow to 20% this year and further going up similar to the tractor industry.
And any player which you are, have a strong partnership with?
We have partnerships with almost all banks and several NBFCs like Chola, Shriram, TVS, Bajaj, and yeah, several of them.
Uh, and what would be the average price for a power tiller and a power weeder?
Power tiller is typically at around 2 lakhs, and the power weeder is roughly at about 60,000.
Okay. Okay. Fine. Thank you. That's it.
Thank you so much. A request to all the participants to ask a question, kindly use the raise hand feature. Alternatively, you can unmute yourself and directly ask a question by introducing yourself. As the question queue assembles, Yash, would you like to take a few of your questions?
Sir, I just want to understand like domestic maybe facing headwinds mainly due to RM cost inflation, below average rainfall forecast, El Nino impact. How do you see your export portfolio performing this year? And do you see similar headwinds impacting that as well?
Yeah, there are other kinds of headwinds in the export market. Europe, as such, has not been doing great. However, what we are seeing is a lot of European economies have started spending money in terms of their agriculture and all the other areas as well in the last couple of years. What has been stopping us is, or rather, the reason why we were flat in Europe is because our rotations were slower because we are sending everything from India. And it would take typically with this war scenario, it has to go around and it takes about 90 to 120 days, limiting rotation, which earlier used to be 30 to 45 days. So it limited rotation, and hence we went flat. So we are setting up our operations in Netherlands, with which we believe that we should be able to grow the Europe business this year.
Okay. And like we have seen industry trends of precision farming, telematics, GPS enabled systems, smart farming technology evolving. So how important do you think the role of AI technology would be there differentiating factor in next 3 5 years?
3 to 5 years could be initial days of IoT and intelligence, but I think eventually connected devices, connected equipment, holistic systems, these are all going to be a reality, and there'll be a lot of innovation which will be coming out of India because it has to be affordable for the Indian farmer. So I believe it will be led by a lot of innovation from the Indian industry. So that is something we will also be working on with our new global tech center that is being built.
Cost of R&D we are investing towards AI tech and all.
Yes.
I'm asking how much would be the total share of R&D we are investing towards uh, technology, AI,
The
GPS.
R&D typically on product development alone, we are doing about 50 to 60 crores every year for the last 4 5 years. And we, for this global tech center, we have announced another investment of 100 crores plus for the global tech center. So infrastructure at about 100 crores and yearly about 50 to 60 crores on product development.
Okay. And like,
Yash, one second. So there is a question from Gaurav Nigam from Tunga Investment. Gaurav, please unmute yourself and ask a question.
Yeah, sir. Thank you for taking my question. Sir, just one top-down question. How important and agri GDP growth is how important part of our growth and how much does it attribute? And second is considering the all the factors which I think Yash mentioned related to fertilizer or the rainfall and other things which the agri community is facing. Are you seeing any forward steps from the government to protect or, I mean, help the community? Because eventually that is how I suppose that's how we will be able to get our volume growth. So, any sense on this overall from the states or center, how it is happening?
Yeah, first and foremost, I think whatever situation I have seen, various ups and downs during even COVID, the government has not stopped supporting the farmers. So that is something that we have seen throughout. The subsidies kept coming, although there wasn't any sharp rise of subsidies, but the subsidies was not cut. So, and I think the prime focus right now is to support the farmers in terms of fertilizer, for supporting the farmers or getting ready in terms of the scenario which could be thrown up by lesser monsoons. So those kind of things is playing out, and it's continuous policy addressal that is happening towards these issues, and it is pretty dynamic. And I think, see, India is a vast country. The problems are plenty. We have more than 16 agroclimatic zones. We have all practical produce that is possible on the planet is being produced in India, starting from cold climate crops to arid crops to tropical monsoon crops. Everything is being produced in India. So it's a pretty complex, I would say, you know, sector to deal with various practices, both uh, historical practices, technology-driven practices, as also very traditional practices. So all kinds of scenario you will find across the country, and I think both the central governments and the state governments are focused on agriculture all over. However, the situation being so complex, it is not something that can grow in a very short time. But we can see in many years we are moving towards that goal of 4% growth of agriculture income. And I think if that continues, it will be good for the country.
Just a quick follow-up. Any schemes or from any state or central government has come forward in the last few months since these things are becoming acute?
The regular schemes, the regular rollout from the center has already happened. The allocation to the states have already happened, and the states are currently in the process of finalizing the particular schemes for the year based on the budgets that they have already declared in their respective budgets. And there is a lot of flexibility that the central government has given in terms of the state government to decide in which area, in what manner, especially I'm talking about mechanization, in what manner the state wants to utilize. There has been guidances and from the center as well to focus more on the small and marginal farmer. So all these are quite positive, and I would say the stress has been there from the ministry to focus on the small and marginal farmer.
Got it, sir. Thank you. Thank you.
Thank you so much. This is an announcement to all the participants to ask a question. Kindly use the raise hand feature. Alternatively, you can unmute yourself and directly ask a question by introducing yourself. Yes, Yash, do you want to go ahead with your question?
Sir, just wanted to understand, like, based on the recent product launches in the tractor segment, what is your strategy going forward to gain market share in domestic tractor segment? And what is the product lineup like for specifically for tractor for next 1 or 2 years?
Yeah, so the strategy is both in terms of product launches as well as geographical expansion in terms of markets. VST predominantly has been a very strong brand in the south, east, and west. We want to grow in the northern markets as well. So in India, the focus is to grow in the northern markets, for which earlier we did not have suitable products, that is the higher HP products. Now, with the introduction of the higher HP products, we have started taking steps in the northern market with the opening of our office in Lucknow. Our operations all across north has started. We believe that we can grow here. In terms of product launches, we have 3 platforms that will be launched in the next. I'm talking only about the domestic tractors. So we will have 3 platforms which will be launched in the compact tractor space, which is about 12 to 16 variants in the next 1.5 years. In the higher horsepower space, we will have 2 upgrades happening this year, plus a new platform that will be launched towards the end of this year. So we totally have about 16 to 20 launches that would be happening in a period of the next 18 months.
Okay. And sir, do we see any impact of TREM 5 regulation above 75 HP and below 25 HP effective from October on overall demand?
The cost effect on less than 25 HP is minimal because the requirements does not need DOC DEPF to be added, and hence the cost effect will not be there, and hence there won't be any effect on demand. However, above 50 HP is where you need DOC DPF and CRDI. So that actually drives up cost by almost anywhere between company to company 20 to 30%, and that could impact And in fact, what we have seen is the government has already introduced TREM 5 above 50 HP, and the volumes have crashed in that segment. So it has all come down to 40 to 50 HP, and that is where you see a good growth in the 40 to 50 HP segment in the last year. So that is what something will play out. However, the good thing is the government has decided to do it in phases. The TREM 5 will not happen beyond 30 HP immediately. There will be an interim period in 28 is what the government has notified as of now. In 28, the TREM 3AA provision will come into place. And that also would increase the cost little, but it will not be too high. And hence, and then they have said the TREM 5 currently they are looking at 2032. So there is still time before that TREM 5 will get implemented across all horsepower segments in India. What has happened is less than 25 and above 50, it has already happened. Between 30 to 50, TREM 5 will come only in 2032. The implementation of 25 HP, like I said earlier, the cost impact is not there, and hence we don't see any impact on demand. And we are ready for that from VST.
Okay. This is a final reminder to all the participants. To ask a question, please use the raise hand feature. Alternatively, you can unmute your line and directly ask a question by introducing yourself. I believe all the questions have been answered. Uh, Thank you so much, sir, for joining. Yash, we can
Yeah.
wrap up.
Once again, I thank VSC Taylor's Tractor Management for their valuable insight and taking time for us today in our session, and to the all the investors for participating. Thank you, sir.
Thank you. Thank you so much.
Thank you.